Good afternoon and welcome to the FX Daily Roundup with ForexAnalytix. And we've seen the euro continue to move higher after that strong close on Friday. But we have come into some resistance. We'll take a look here. You can see right here at this 1213. Now, really what's coming is key is going to be this weekly level here at 1232. And that confluences with 1236, which is a 38% of this entire move from 879 all the way back up here to 1814. Okay, so you can see this significant low here, a rally back. Takes us right there to 38%. You can see that right there. So we have 1232 confluence is a weekly level, and that's confluence in here with 1236 at 38%. Now, we didn't get much of a pullback here. We were looking for hopefully, which didn't come back through, a dip down to around 1160, and you can see right there comes in actually a little bit lower right there, which just comes out on the 2-hour chart. But you can see here, we just simply didn't see that pullback. We actually have our resistance today at 1236. Potentially, we thought in case the market did go on and pair back to around 60, and then or in the 60s, and then we launch back up. I thought, well, that's going to be a good area, that 1232.36. But we did not pair back very much at all. And we since kind of pushed a little bit higher, then we dipped back and we pushed a little bit higher to goose some stops. But it's slider trading. I don't want to say it's thin necessarily, although maybe so, but it's just slider trading as we come into the end of the year. A lot of book squaring. We did get a strong close. This is actually the best close. If you look here, we were saying the euro, albeit in light trading conditions, closed Friday at its highest close in 11 weeks, taking out resistance at 1169. To start the week, immediate resistance is 1203, followed by the weekly level of 1232, confluence with 1236. So when we did the analysis this morning, and the pair didn't appear that it wanted to pull back much, that's where we opened the door to move our bias chart resistance up here to 1236. If we got those stops to push higher, looking at a little bit longer mode. But that being said, we've got some resistance here, and the market got just above. We haven't pushed higher. We may have to see this pair dip back a little bit. Correspondingly, the dollar index has come into some support right here at 96.62. I shared this in the chat room. I think we have to put it on a 4-hour, which I generally don't look at 4 hours, but in order to get a little bit closer look as to what we're looking at here. So if you pull this back here, you can see here this confluence, or not confluence, but a lot of action right here around the 62 area here. So we're looking for that to hold a little bit. So probably get a pause, as we were talking about in the euro from up here. We have a minor little gravestone doji. You definitely wouldn't want to be fading this, because I think that the euro, we've got it on a outright bias as far as a buy now, because who would have thunk it, as much as the euro's fallen. But that being said, we fell and we had the opportunity to break low, and we simply didn't do it. We held and held and held, and Friday we took out, and like I said, this was the best close in 11 weeks, an 11-week high. And then of course we added on to this this move, and here we are above 112. So a lot of things coming into place here. If we can start to see a little bit of a bottoming action, which we are starting to see in Eurozone economic data, as well as the dollar has already had a pretty good significant run. One of the concerns is that when the thing with China, the whole bit there is that we've been getting that safety into the dollar, and that has waned somewhat on that. So, and then on top of that, we'll move into the dollar index. We've already had a pretty good run up here, and the market's had a hard time, maintaining it. It's been a phenomenal run, but we've had a hard time. And that 97.89, remember, that was a key weekly level. And obviously, we've slid right back below that. And potentially, we're looking for a move down here to 96.01. Actually, it's a good confluence in here with the last return rally here with 96.59 to 97.83. And right here, puts us right here at 95.82 for 161% extension here. And then that confluences with this 96.01. Although overall, we could still move somewhat lower. We'll go and take a look at that here. See right there, the bottom here and the last rally back puts us right there, 95.82, which is 161% extension. That would actually be confluencing with this 96.01. You know, the markets usually overshoot, so you probably get that overshoot. So potentially, I think we can slide down here. But once again, it's ladder trading as we finish out the year. We are seeing the peso try to pick itself up off the lows. We do have a bias chart resistance coming in today at 1893. This level comes in actually at 1892.7, so hence the 1893. Dollar yen has really given back as we've seen equities weaken. We talked about this and the significance of this pivot. And we'll go and move into the daily here. And I actually shared this analysis over the weekend, sharing these charts that I have in the basic technical in ForexAnalytix. But we were saying here, the dollar yen is stuck in neutral above the pivot, 927. We've talked about that relentlessly, the importance of this pivot. The pair needs a daily close above 1007 to spark an upside run, which would take it up to 1187. 2 consecutive daily closes below 927 will allow the pair to challenge 832. Well, we've already made a pretty good dip back here. Maybe we'll see it stabilize, but like I said, 2 consecutive daily closes would pretty much solidify this move down here. And, you know, the yen's been fighting this, which have not been able to weaken any further, i.e. the dollar yen gain further strength here. As far as the cable, let's go and move into that quickly. We are up here at this 3140. We actually had our bias chart resistance today. I think it was 3136. Let me see here. Yeah, 3135. Have bias chart resistance. We'll run out of gas a little bit above 3140, but we'll take a look at it on the daily. So we're looking for a move up here, right here in this 3195 area. Cable closed back above the pivot of 2980 after defending 2918, which is the 38% back of 1956 to 3514. A rebound to 3195 is in the cards with initial resistance at 3135. That's where we came up with that, and we had support at 3089. And looking here with the dollar CAD, we're seeing this trying to, well, actually, we're back on our lows again. And says the Canadian currency has joined other commodity currencies gaining strength on the dollar. After closing below 31.36 on consecutive days, the pair is open to a drop to 29 even, with immediate support at 30.29. Resistance is 31.36 followed by 31.82. The pair would need a daily close above 32.06 to negate the bearish outlook. But today's bias chart, like I said, we've already had a pretty good fall. We're looking for support here at 30.53. So we've actually, I think we may have already tagged it here. I was looking for that. We're so oversold. We're thinking, okay, we actually did hit 30.53 to the pip. So we're looking for this to hold. Look, we've already seen 2 hard, consecutive, lower closes. Market might be a little bit overdone. Now we do see support at 30.29, but in our overall analysis, which is short term at that, but we are looking for this to make a little bit of a stand here at 30.53. So if you're already short, you might want to tighten up some stops. I mean, eventually I think we'll get to 30.29, and we're looking for overall potentially a break to 29, but probably see a little bit of the market trying to make a stand here. We shall see. Kiwi, let's go and move into that. And this continues to move higher. Although on a 2-hour chart, we do have some resistance here at the 67.34 area here. But it says the Kiwi has been on a relentless run with potential to 68 even. Confluence with 68.06 to 78%. Initial resistance is 67.27. Support is 66.34. Well, we're looking earlier. I'd even take a quick little mini scalp at that 67.30 and actually got out, spun out for just a small amount. Didn't look like this market. I was thinking we might be able to pair back and dropped down to about, 67 even, and that just simply wouldn't happen. I was glad to spin out. But that being said, we've had such a look at this. This has just been phenomenal. So I think it is open to a pause. I just didn't see the point unless I saw a true reversal down here, and certainly not seeing it right now. But this is a key level here on the 2-hour chart. We're actually looking on a 30-minute. Pare this back a bit. You can see it right there. So we may see a little bit of a pause here, but we shall see. But potentially this market can still make it up to 68 cents. But once again, you can see here with the dollar index is trying to make a stand here at this 96.62. So once again, you may see some of these antipodean currencies, obviously like the Aussie dollar, also maybe make a little bit of a pause up in here. We've already had a pretty nice run up here in the Aussie. Certainly nothing compared to what we saw in the Kiwi, but it does say here, let's pull this back. So the Aussie successfully broken the year-long downtrend line. The immediate target is 71.23 with initial resistance at 70.27, confluencing with 70.32, the 50%. So you can see that right here. So we'll see if we can't make a beeline here. Certainly, like I said, it's broken a key downtrend line that's been in place since last December. That's important, but certainly we haven't had the kind of run that we saw here in the Kiwi by any stretch of the imagination. We are starting to see S&Ps pare back a bit. We'll just take a quick look there. Let me move this out of the way. So we have established a little bit of a hammer bottom, and we're still trying to push up higher here at 32.30, but resistance, you can see, come in right around there, which is going to be 32.36. I'm surprised to see, but we do have some support at 32.13, and then 32.09 is just below that, 32.09.25. I thought we might even push even lower. And, it's interesting, despite the SPOOs trying to come back, the dollar yen is still below 109. So interesting how we've come back on that. Crude oil had actually done some stops above $62, and we since paired back, but you can see here on a 30-minute, you had a medium-legged doji, and the market paired back. I haven't done anything in crude for probably 6 weeks or longer. Maybe I'll get back to that, but it had been trading so nutty for a while, and once we got above that $58, and we'll see what happens eventually. But like I said, probably was a nice little setup here on that medium-legged doji, and certainly opened the door for us to move lower. And boy, we certainly did move lower. I think one of the guys in the room, DK Trader, he was short. And also I think CNOS was too, but DK had covered it and then added some more. So well done for those guys. NASDAQ pairing back a little bit, but like I said, interesting to see the SPOOs. I thought we might have stayed relatively weak, but once again, some very short-term short-term resistance at 32.31. So let's call it 32.32 here. And beyond that would be 32.38, but let's watch what we can do. If we can't get a foothold above 32.32, that would be key. Let's see here. And you can see here with the Kiwi yen, which has had an unbelievable run up here. There we go. So probably a little bit ready for a little bit of a pause. We can still move higher. Just a quick look at some of the sterling pairs. I will take a look at the guppy. Still bearish. I mean, we'd have to get above 43.81, and there's 43.76 is actually a 38%. So we'd have to jump back above that. Guppy is bouncing back from oversold conditions. Key resistance is 43.81. You can see that level there. Confluencing with 43.76, which is a 38%. A break above finds 44.57. You can see the 50% there, but we'd have to get above that. So we're bearish on that unless we can get 2 consecutive closes above 43.81. And for the sterling odd, sterling odd is holding just above the trend line. A further break appears likely with a move to 85.69. Initial support is 86.39, the 38%, with resistance at 88.42. So we're just kind of marking time. And that's all we have for now. So you can join us back here on the FX Daily Roundup, or like I said, take advantage of a trial membership with ForexAnalytix. Be able to go on and not only see all the different analysis, whether it's basic technical, harmonics, Elliott wave, macro, but also the support that we do going to get here in the chat room among all the other traders. But once again, thanks for joining us here, and have a good luck trading with the rest of the day.